Good morning, everybody. Oh, we're into the void. Pushing down under the 20. And we got 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. About 10 bars up there. 10 days of chopping sideways of uncertainty as to which way things are going to go. And yesterday, the futures closed below the 20 MA and below this pivot low. Down a little bit further this morning, see how far down they were. Oh, at the bottom of the bar, and it's 24 hours. And so the first possible stop is what we call minor support here, which is always subjective as a reference point, but others will be looking at it. Minor support, the high, right? As it's coming down, it was the old high. Right? What was resistance becomes support. That's the theoretical. And the reason I say it's subjective is because, over the years of looking at something like this and saying, oh, there's support, and watching so many stocks or markets slide through it like it wasn't there, I was like, man, that's just doesn't matter. How could it really be support? And so the idea of, came up with years ago, you got to have rules and kind of theoreticals as to why you think certain things, right? And the thing was, once it traded below and back above, it neutralized it as a reference point. So that gave a way of understanding why it was subjective and the possibility that it could just go through it. Now, it may stop there just because enough people are looking at it. And these bars do overlap a little bit, which is on 713. If we scrunch this up, I don't know if I can scrunch it enough to see how that lines up there. Really not. There's nothing there. I thought maybe these overlapping, but I gapped up a little bit there. There's nothing there. However, as we always look at, a whole number like that, well, it is on that little pivot. So on the way down, you got to be aware of 4,500 as being a potential turn or stall point. Let's put it that way, stall point. That it could come down to and test that area, and we'll see what happens. So it's broken. It's not at support yet. There is a little bit of support there. It could stabilize there for the moment, and then maybe traders waiting for tonight's news earnings on Amazon and Apple probably. And then we'll see where things go from there. Before I get to that, you can see sentiment certainly hasn't gone anywhere near bearish yet. Breath coming down. It's not at an extreme by far. But as a correction begins, we want to see option traders believing in it and looking to profit from it, and then be willing to be buying an excessive amount of bearish bets, put options after things have been going down. I'm saying, well, it's ridiculous buying put options at that point. But this is why we look at that, and it's not there yet. So it's got gas in the tank to go lower. Minus support down here at that area, the highs that prices traded below and back above. There's an unfilled gap down here. So somewhere in this unfilled gap and subjective reference point, I think is a reasonable downside target area initially. So yesterday was the first break, and coming down here, and then ultimately, we'll see if it gets down to this major support area in the 50 MA, which should be pretty strong area. The faster it gets down there, I think the better for a bounce, but we'll see. And you can see, we'll see where tomorrow ends, because we're getting the first larger red bar at an area of resistance on the weekly chart. And this isn't done yet. All right, so things were down. Pre-market, you can see where my cursor is. So it was down there a decent amount. We looked at the futures. So it was down into this area before it bounced up. Little tiny gaps down there. So rolled over. It was the whipsaw on whatever the economic news was this morning. Tomorrow, I think, is the jobs report. So more news pushing markets around, and of course the earnings. I want to see. Look at this VIX. So that finally moved up and got up to this prior pivot high. Look at the wide range bar up. So again, looking at other pieces of information that would support our bias. We don't want to ignore things that maybe would suggest, hey, take a second look at what you think is happening here. So the more things in alignment with what we see happening, the greater the probability that it's going to continue. So what we want to do is that 200 MA somewhere in here, right? That 200 MA, and let's duplicate that. And these prior pivot highs, this area, and setting alerts there. Right? You can't see it, but it's popping up on my other screen. Setting alerts in those areas. So we don't have to watch this during the day. If you're a day trader, this is helpful to watch, like with the AD line, which way is this trending and which way this is trending. That could be helpful if you watch it on a 5-minute chart. But when it comes up here, maybe you're not watching it, and alarm goes off, and it's like, hey, things looking pretty ugly, and this goes off, and it's like, hey, maybe we're at a short-term low point. It makes sense to set alerts, to be aware of reference points on the volatility index. You might not be watching that. I'm going to get to SPX. Look at this. Look at this. Right? It's coming up to the prior high on the weekly chart. That's going to keep pressure on the markets, man. This was like when my alarm went off the other day, and I was like, what's going on? It's just, kind of made sense, but didn't make a sense, all of a sudden that it started moving, and now it's pushing higher again. So higher costs for everything, to the government, to mortgages, to anything. This is the 30-year, but the others, the 10 years breaking out, and that's up at the top of the range. Another bearish influence to the markets as these interest rates go up, and the 5-year hadn't. That's starting to perk up a little bit now. So that's been lagging a bit, but that's starting to move up a little bit. So as all of these interest rates go up, the cost of borrowing is pushing up. All the cost of borrowing goes up across the board. And so probably the rhetoric, the talk about recession, which is, they're kind of counting that out, soft landing, no recession, whatever. All of these increased costs are going to contract people's willingness to buy and borrow. So that, something that could be influencing what happens in the coming weeks and, next month or so. All right. So with the move down, SPX, the premiums begin to get jacked up down below. So last I looked today, 440, 455, which is right on top of that minor support and gap. So that's a good spot. If it drops right at the open, the S&Ps drop right at the open. If we can get down to 4450 or below, that's even better, of course, because more things you have an alignment, minor support, a gap, a number, 4450. And of course, you can look at where there's large open interest, which will act as support. And 45 up above, unlikely to get up there. So an iron condor, if it was above here, would be even better. But the downside, I think it could go lower today. there's a good amount of support down here. And, going out, excuse me, which I don't know if things get out of hand tomorrow, but in my throat, this 4,400 level where all of these pivot lows are here, they have the biggest open interest down there, and has been for a while in calls and puts, but it's out into the next expirations, not the current one. But anyway, that will provide should provide a very stiff support level, just based on this area and that number as a reference point, where, hey, if it goes down there and comes down there, especially as a day trader coming down into that area, you should now start looking at your 5-minute chart, looking for bottoming, because it could be a very big bounce. Should it be able to get down there? All right, Qs, weekend, big bar yesterday. See pre-market, they're coming down. They got plenty of room to fall. Yesterday, I mentioned XLK, which did look like I wouldn't call it a no-brainer, but it looked like a nice setup that could go higher. And look at what happened yesterday. So tech got whacked yesterday, and it's going lower. So there's many things in alignment to support a bias that prices are going to go lower here. Covered the Russell a week ago, was coming up to the top of the trading range. It's there. It's holding up relatively well. So I would imagine it's going to break, but this is a good sign that it's holding up as well as it is. We'll see how much it holds up into next week, but it's showing some relative strength. As you can see here, it's holding. That's good. So while bearish short term, we look for some things that are, saying, hey, you know what, going out a little further out, is there's some positives still out there. Transports, they're coming down, they're at resistance. So everything is lined up, to expect some kind of further corrective price action. And, today when I put on the slide there, are you ready? I want to reiterate, because I always do with these market corrections, that, market corrections can seem relatively benign, meaning as this comes down, and maybe it comes down 5% or so, which is really not a big deal in the context of this nice move that it had, but there'll be plenty of stocks that are going to go down 25%, 30%, maybe some worse than others. So if you're owning individual stocks, don't be complacent, because things can get pretty ugly, and what's going on under the hood could be, I've seen it time and time again, pretty bad compared to what can seem relatively benign, as far as what the stock market is doing. Just a quick look, TBT interest rates. You can see how it's moving up. It's breaking out. Looks like interest rates are going to go higher. And so it's going to put pressure on the markets. It's just the way it is. The dollar, watching down here, support, resistance. And as it comes up to resistance, that may be where the markets get a little short-term reprieve. Maybe the dollar begins to back off and interest rates get short-term extended. You can see silver and gold here moving down as the dollar moves up. That's the relationship. Crude oil, just getting whippy here, and that got up to the top of the range. So look to the left, coming down here. A little jiggle around, and we'll see if it makes a top, or whether it goes sideways and the 20 catches up, and maybe we get a red bar ignored, and oil starts pushing up above here and throws a little more, no pun intended, gas on the fire of the correction. If crude oil starts pushing up through that level, and here's gasoline, that's coming down now. So, but that broke out, and with the breakout on the weekly chart, something that we covered in MT Live yesterday was higher time frames, and we looked at bottoms giving us a bias. So here we have a bias that gasoline can go higher. The daily chart is saying it's going to correct, wide range bar down. Well, as it comes down to some support, there should be buyers, say at the 20 MA, because the weekly chart is bullish. And while I said this is subjective, as support, minor support coming down there's a big area there. So let's just put this on the other charts and see where it lines up. There you go. So somewhere in between here, there should be buyers for gasoline. This could be XYZ. It doesn't matter. It's just how we would interpret the chart. Mike said, how many times do you think you said I look to the left? You know what, Mike? I don't know exactly. It could be 1,000 times, but eventually people get it. Because when people first hear me say something like that, of course they haven't heard it before. They don't get it because their brains have been polluted with trend lines and fib lines and all kinds of other stuff. And how could it be so simple to look to the left to find support and resistance? We all think the markets have to be so complicated, and it's like, but after you start looking, and the reaction is, holy shit, this stuff works. So I've said it a lot. Bitcoin was still waiting to see which way that goes. Bottoming tail now, opposing topping tail, indecision. Weekly chart still looks pretty good, but we'll see. All yours, Dan.
Good morning. So yesterday in the green room, we always finish with a bias for the next day. And let's take a look. And there's a lot of disasters this morning. So I said that I am glad that we were bouncing a little bit into the close, because then this is what we call a bearish end of day base, bearish daily, bearish weekly, price void. I had a 100% bearish bias. I said, ideally, I would love to open flat up a little bit, chop around for 30 minutes, and then 30-minute low, we would be giving buy puts, short the ETF, but just full out blown bearish bias. Now we're dealing with a gap down now, but it still looks lower. Greg talked about all that. So I still have a bearish bias. Just got to figure out the entries. We only did one earnings trade. Etsy here, buy setup. So it's gapping down to 80s. Oh, that's a big gap. That's ugly. We did the 82s for tomorrow, so we still have over $5 of comfort. But I'll be looking to get out of that. Hopefully we'll have a profit right at the open. Expedia here, I just saw. Look at this disaster. Look at that bar. So gap down to 105, this prior low. So that'll go in my category of excessive gap. Let's see where buyers want to step up. But we have been adding shorts. We have a number of shorts and long put setups. We did a call spread on Microsoft, UAL, long puts on AT&T. All right, shop 61. But we were saying yesterday, yeah, we're totally looking for call spread candidates. As PayPal is getting whacked. That's a big gap also to this prior low. Look at that. One gap is wiping out all these bars and all this consolidation. So remember, I was so cautious selling options yesterday because I made the comment that when the market's in a bad mood, which it was yesterday, they're going to punish bad earnings worse. If the market's in a good mood, they're gonna punish them less. That's the way it works. And I'm like, market's in a bad mood now. And we actually, I go through earnings periods with Sam every afternoon. And so I know Sam did a bunch of short scrambles, the way out of the money put. And I'm like, Sam's selling out of the money call too. And he did. He's a good trader. Hood 1160, has room to fall. There's call spread candidates everywhere. You just got to go through the checklist, see if they're liquid, see what the premium is. I doubt we're going to get anything for tomorrow now, but for next week, Joby, no pattern. Run, and I went through this pre-market. I deleted a ton of them already, just because there were so many. 1985. All right, there you go. There's a bullish gap. It's a 30-minute high. That looks good. I have Etsy on the other chart, so let me put the run here. Art F will get hurt. Let's see if there's a pre-market print. 2233. That's not that bad, Alex. I mean, as of right now. No, it's not bad, but yeah, it has a price for it to go lower. Qualcomm getting whacked. 116. God, look at this. Many things gap into these like July lows. Kramer was bashing them because saying they're kind of misleading. Oh yeah, our numbers are going to be good, 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 and then, well, no, they're not good. 3330, bullish gap, but no void. SD, I don't like the overlapping bars. WMB, nah. Goodyear tire 14. It's another big gap right here to minor support. We'll come back to it. Pizza delivery company back to flat. But look, the weekly, you have a Climo with a 180. Look at the 2050 200. So even though that's a buy setup, it's a buy setup from a Climo. And so that's just not ideal to do anything. Yeah, hey David, I saw W gap and I was been on my core list. We actually tried selling puts on it. It was in last weekend's letter, never got filled. No ATOS, no pattern, trip getting whacked. 1680 right to the 50, no pattern. MGM 4650, there's still a void. I mean, this would be a pattern for a condor selling out of the money call spread, out of the money put spread for next week, if there's any juice. Oh, it's a buy setup, deep retracement. I set an alarm up here already, 6050 or whatever. Here's a bullish gap, EVGO. Let's watch that on a pullback, has room, to low fives. Z was on my 4 long watch list, gapping down here. So nothing to do now. Etsy, we know about. NTR 64. Middle of no man's land, another condor idea. LNC strong, but I'm not in a bullish mood. PK 1281. Range bound. Lemonade 20. Range bound, nothing to do. NE to extend it for me. Upwork 12. That's a big old gap. There, I wanted to see what the monthly looked like. All right, so that's bullish, but the gap's too big for me. ALB, I posted this in Telegram. I like this gap a lot. So it's a breakdown failure. I have it here in the bottom right, ALB. So put spread idea for sure. 30-minute high, whatever. I like as a directional. That's a beautiful void with a breakdown failure. That's one of my favorite gappers here so far. Sedgar. Down 20%. That's getting whacked. A lot of whackage going on today. 1691, gap in a minor support here, but no interest. Cake opening relatively flat. That is a buy setup, but that is a great example of we don't buy buy setups with a ton of overhead resistance. Hudson 9.7. That's a big old gap. Wow, gapping over red bar is a shock pattern. You can watch that on a pullback. I'm not, because I got too much other stuff to look at. 112. There's a bullish gap. That's better. So Cuervo was better than that other one. Let's watch this on a pullback. I'm running out of thumbnails here. OHI, I don't see a gap, but I was showing it down 70 cents. We'll come back to you. P-Core, $70. I don't know if it's going to hold or not. 30-minute low, you got a price void lower and a call spread. No frog, big old mess. UGI. Okay, so this is a nice, it's gapping under a green bar. This is a nice 30-minute low trade. I'm going to go ahead and set an alarm at 26. Just because I'm watching too much stuff right now. But, you know, it's in a downtrend, upside shakeout, bearish weekly, monthly. So 30-minute low would be ideal. Where am I? Shoot, where are they going? Right here. FMC, that's another one. I can't tell where it's opening, but that looks like it's coming in to $90. So see, I'm highlighting my tier 1 list here for you all. So I depending on where it opens and what it does in the first 15 minutes. But I like that as a short. Really 2087. I like this as a long idea or a no-brainer put spread. But just because I say I like it, you got to watch it in the first half hour and see how it sets up. This, I said I loved the buy setup, breakdown failure, bullish close. This was a strong candidate. This was a strong candidate to sell a put spread into earnings. I almost did it. FMC alarm. All right, look at this run is moving, but the gap's too big now for me. All right, I just had a alarm bell go off. What did I get filled on? Oh, a trip. Okay, I had puts on trip. That I just got filled on. I had a bid out there for a dime. I need to watch this Etsy. It's spready right now. XLR E alarm, HE alarm. All right, see bottom right. ALB is coming in hard. So HE was a buy setup here. My alarm went off. So here's a long watch, but I'm doing nothing right now until I get a better feel for the market. But this is bucking the trend. So if somebody wants to write that down, wait, here, I'll put it right here, HE, because the run is too extended. Let me continue. UGI alarm. This was, this was earnings. Look, so that looks great. You know, I typically don't like trading in the first 5 minutes because things can whip around. but that looks great. All right, let's close Etsy at 30 cents. Just take the small gain. All right, so I'm out of my two earnings trades at profits.